Hi there, welcome back to Market Fatafat. Let's keep it going with all the stocks that are big buzzers in today's trade. And one such stock that we wish to highlight in today's trade is Swiggy, because that stock has done phenomenally well in today's trade. At one point of the trading day, that stock was as high as 7%. Let's take a look at why the stock has been surging today. Even in fact continues to surge, almost 8% uptick coming in on an intraday basis on Swiggy. So that's very interesting to watch. But here's the reason why Swiggy has been buzzing. Two reasons. Firstly, before market open today, 1.1 million shares of Swiggy have changed hands in a block deal. So that's something that's been going on for the stock. It's a major block deal coming in. Other than that, this is on the back of a brokerage note wherein Axis Capital has initiated a buy rating on that stock with a target price of 640 rupees per share. They believe that Swiggy is in second place, but it still has more fuel left to compete in this race. There's compelling investment opportunity as India's second largest quick commerce and food delivery player, and food delivery and quick commerce businesses in India remain under-penetrated with a long growth runway ahead. Swiggy's ambitious store expansion targets in quick commerce should aid its gross order value and top line growth. Also, its cost control is improving, and Swiggy's ideation and innovation on abilities and strengthened leadership team should help it stay a market leader, is what Axis Capital is pointing out. Very positive note coming in. They've initiated a buy, target price of 640 rupees per share. The stock up almost 8% as we speak.
Alright, that's Swiggy in focus today with upwards of 7% gains. In fact, Swiggy, Zomato both have been in focus in the last few trading sessions. But let's move on to another counter, HDFC Bank, that is in focus today. In a surprise move, HDFC Bank has restarted its talks with Japanese financial giant Mitsubishi UFJ Financial Group for a sizable stake sale in the non-lending subsidiary HDB Financial Services. Now, sources aware of the matter said that the norms proposed by the Reserve Bank of India, which unveiled on 4th of October, may have forced the HDFC Bank to rethink a possible stake sale ahead of the HDB Financial's initial public offering. Now, HDFC Bank has offered 20% stake in HDB Financials to MUFG and is said to be more amenable when it comes to a deal valuations. And the back of that, HDFC is in focus today. Currently, it is trading absolutely flat with cuts of 0.3%.
Okay, well, let's move on. Ria, you've picked out JK Paper for us. Some internal rejig happening in the company. Tell us what's happening.
Well, absolutely. So JK Paper is in focus today since they've announced a scheme of arrangement with 3 of its subsidiaries with Enviro Tech Ventures Limited to consolidate its business operations. Now, as a part of this scheme, the 3 wholly owned subsidiaries of JK Paper, which are engaged in the manufacturing of packaging products and solutions, will be merged with the company to create a consolidated paper and packaging company. Now, further, Sirpur Mills Limited will also become a direct subsidiary of JKPL, and the transaction is expected to be completed within the next 12 months. Now, separately, the board has also approved the acquisition of a majority stake in a company called Radhesham Wellpack Private Limited, which is engaged in the manufacturing of packaging materials, and the company is going to acquire 60% shares of RWPL upfront, and the balance 40% is to be acquired within a period of 2 years. On the back of this, the stock is up almost 5% as we speak.
Okay, that's the reason why JK Paper is in focus. Let's move on, talk about yet another high flyer in today's trade, and that's Oberoi Realty, because it's not one but 2 brokerage notes that have come out this morning on Oberoi Realty. First up, Axis Securities has initiated a buy with a target price of 2,560 rupees, significantly higher than where the stock is trading right now. The stock is also up 7% almost. You also have a Spark Capital note that's coming in, and they have triple upgraded this stock from a sell rating earlier to a buy rating now. They believe that FY25 marks an inflection year for the company, driven by the start of its launch cycle. There's traction in ongoing projects, and that augurs well for pre-sales, which are projected to scale up from 40 billion, which is 4,000 crore rupees in FY24, to 10,000 crore rupees in FY27. This is their estimate, and it's a very hefty amount coming over here. In the annuity segment as well, 2 of its most awaited assets are likely to commence operations and scale up rentals within the next 2 years, and that will come up to 1,500 crore rupees as well. They've upgraded their rating to a buy with a target price of 2,700 rupees per share. Quite a significant bump up coming in from the current market price. Stock is doing pretty well on the back of these 2 very bullish notes coming in on Oberoi Realty.
Alright, bullish note on Oberoi Realty. It is soaring away in trade, 6.7% in trade. Another count that is in focus today on the back of a Jeffries note, and of course another news piece on Max Financials, is that the corporate name of Max Life has been changed to Axis Max Life Insurance Limited. And of course a brokerage note by Jeffries that has dished out a buy call and raised the target price, suggesting that the deal with Axis Bank bodes very well for the coming quarters. And now the target price that they have set has a potential upside of 47% from the last close price on the NSE. And the brokerage has highlighted that the partnership between Max Life and Axis Bank has resulted in a rebranding of the company to Axis Bank, to Axis Max Life Insurance, like I mentioned. Jeffrey said that this refreshed identity is expected to boost the brand recall, particularly in Tier 2 and Tier 3 markets where Axis Bank's presence is much stronger. Jeffries also noted that the regulatory norms on the bank assurance will need to be monitored, given that Axis Bank contributes 45% of Max Life's annual premium equivalent. The stock is trading at an attractive valuation of 8 times to its price to book value of the new business. And on the back of that, they're maintaining a buy on Max Financials. Currently, it's trading with gains of 2%.
Okay, looking good for Max Financials. Also looking good for Glenmark Pharma right now. Ria, that stock is also up 2.5%. I believe it's a positive news flow coming in. Tell us what it is.
Glenmark Pharma USA has announced the launch of a lacosamide oral solution 10 mg, and this drug is equivalent and therapeutically equivalent to the reference listed drug called Vimpat oral solution of UCB Incorporated. Now, according to the IQVIA sales data for the 12-month period ending October 2024, the Vimpat oral solution market has achieved annual sales of approximately $57 million. Now, Glenmark's current portfolio includes about 201 products authorized for distribution in the US marketplace and 51 ANDAs pending approval with the US FDA. And in addition to these internal filings, Glenmark is also continuing to identify and explore external development partnerships to further enhance and accelerate the growth of the existing pipeline and portfolio. On the back of this, the stock is up almost 2.5% as we speak.
All right, moving on then from Glenmark Pharma to Sameet Chavan is now joining us on the technical chart. Hi Sameet, good afternoon to you, and thank you so much for joining us finally. But coming to you, you picked up DLF for us. Tell us, what are you seeing on the charts for this one? This counter has been, firing away. It's done pretty well in the last 1 month. In the 1 month, it's up 17, 18 odd percent. In the last 6 months, it had not really moved much. From here on, where does it go?
Good afternoon. See, as far as DLF is concerned, if you see the entire realty space is on a roll since morning, and DLF is the one stock, the heavyweight counter, it has already broken out from its important resistance of 882 in the first half an hour of trade itself. So overall, yes, the trade remains on the positive side, and as a disclosure, we have recommended this to our clients as well. So 908 is the immediate target which we are looking at, and once the stock surpasses 910 on a closing basis, you could see the stock challenging its recent highs somewhere around 930, 925 kind of zone. So overall, the bias remains positive. Any decline is likely to get poured into, and on the low side now, previous runs of 882 would now act as a very strong side.
Okay, so that's a view coming in on DLF, the levels that Sameet is spotting. But let's talk about another stock that's been in focus ever since the opening. Well, in fact, it's been the stock of the day today. Dixon Tech is in focus because that stock has hit a fresh new record high today. The company has signed a binding term sheet for setting up a new manufacturing joint venture with Vivo India. And under this agreement, Dixon will hold a majority 51% stake in the joint venture, while Vivo India, which is a subsidiary of the global smartphone giant Vivo, will own the remaining 49%. The joint venture will undertake original equipment manufacturing, which is the OEM business of electronic devices, including smartphones, and this facility will undertake part of Vivo's OEM orders of smartphones in India and can also engage in OEM business of various electronic products for other brands as well. So very positive news flow coming in. It's a very concrete tie-up coming in for Dixon Tech with Vivo. Stock up 4.7% as we speak.
All right, that's Dixon Tech and how it's soaring away in trade. But moving to Cummins, Sameet, tell us what are you seeing on the chart for Cummins. This one has also moved up quite a bit in the last 6 months, but last 1 month it hasn't really done much. So tell us from here on, where does this go?
This stock has been consolidating since last 1 month, as you rightly pointed out. But since morning, the kind of volume participation that we are witnessing, it looks quite promising. Stock has already challenged its recent highs of 3660, 3665, and is trading convincingly above it. So once the stock surpasses 3700, with a follow-up move, you could see breakout confirming in this particular counter, and 3770 is the next target to watch out for. And as a disclosure, we have recommended this to our clients as well. Overall, if you see, the stock has already formed a good base around 3250, 3300 kind of zone. So any decline is likely to get poured into. And on the immediate, levels, 3400, 3450 would act as a very strong support.
Okay, that's the view coming in on Cummins India. Ria, you've picked out TCS for us. The stock has been under slight pressure ever since the get-go today. Tell us what's the reason. I believe it's on the back of a brokerage note.
So Citi has actually maintained its sell call on TCS with a target price of 3,935. Now, in terms of the demand outlook, they say that the BSNL project is expected to be stable or face a slight decline in the third quarter and start tapering off post that. Now, smaller discretionary deals are emerging, but they do face ROI scrutiny, and mega deals are also being divided into smaller contracts. If you look at UK and Europe, we are seeing softer demand over there compared to North America, and furloughs are also similar to last year. Now, TCS aims to achieve an aspirational margin band of 26 to 28% going forward, but still, nonetheless, Citi has still maintained the sell call on the stock, and the stock is trading with cuts of 1.5% as we speak.
All right, TCS trading cuts of almost 1.5%. Sameet, coming to you, IGL is what you picked out for us. Tell us, what are you seeing on the charts for this counter? I mean, in the last 6 months, it has been in a consolidation phase. It's in the last 1 month, it seems to be some sort of a breakout. It's moved up 21%. Tell us from here on, does the positive momentum continue on this counter?
Yes, except last 3 weeks price action, this stock has been a laggard. In fact, this stock corrected quite sharply from the levels of 560 towards 300. After forming a good base around 300, 310, the stock give a sharp recovery towards 400 now. Now, if we look at the daily time frame chart, we can see a price pattern which looks like a bullish flag. And once the stock confirms a breakout beyond 400, we could see the stock giving a good pullback move towards 425, 428. So as of now, the kind of price traction overall we are seeing in gas distribution companies since morning, we expect this breakout to happen, and probably this stock would give a decent move towards 425 in coming days.
Okay, those are the levels that Sameet is spotting on IGL. Sameet, stay with us. We'll just go across to an ET Now exclusive. It's a major exclusive coming in. Pure term life insurance premium is likely to be GST exempted as the GOM has proposed a complete exemption. My colleague Anurag Shah, who tracks the insurance sector very closely, is joining us with all of those exclusive details. Anurag, take it away. It seems to be a very big news flow coming in for the insurance space.
So in last two GST Council meeting, there were expectations about the rate reduction on insurance premium, but it was not, insurance issue was not taken up in the GST Council. But for the upcoming GST Council meeting of 21st of December at Jaisalmer, Rajasthan, this issue is likely to be taken up, GST rates on insurance premium. And as per our sources, group of ministers on insurance has recommended complete exemption of GST on term insurance, pure protection term insurance. So it will be a big development in insurance space because insurance penetration as per the global average is very low in the country, and to achieve the insurance for all target, GST reduction demand was happening from all quarters. So if we talk about the listed companies, then the share of term insurance in their total AP for HDFC Life is around 13%. For SBI Life, it's 10%. For ICICI Pru, it's 15%. And for the market leader, LIC, the share of term insurance for pure protection is less than 1% of their total AP as per the FY24 figure. Currently, there is a 18% GST is charged on the term insurance premium. And if it's get exempted, then there will be a relief of 18% for the policy holders who are paying for their term insurance premium. If we see the trend also in last few years, after COVID, there was a hike in term insurance premium, but in last 1 year there is no change in term insurance premium. In fact, companies like ICICI Prudential has reduced the term insurance premium by 10%. So group of ministers on insurance has recommended for the pure protection term insurance plans complete exemption of GST.
All right. Thank you so much for joining us. Well, on that note, we will keep getting you more updates on that growing story. But let's resume with all the stocks that are in focus today. Coming to you, Sameet, Shree Cement is what you've picked out for. As we've seen the re-rating coming in the cement sector, but in the last 1 month it has really started moving up. Up until then, it hadn't really done much. Tell us what's on the charts for Shree Cement.
Clearly, the entire cement space has been buzzing since last couple of weeks, and Shree Cement is the one stock that has rallied nearly 15% in such a short span. In fact, the kind of price action that we have been witnessing since morning, stock has already given a breakout from a bullish pennant pattern and is now knocking the door of its next important resistance cluster of 28,500, 28,600. The kind of volume activity is backing this price movement. It suggests that the stock is likely to surpass 28,500, 600 in probably next couple of trading sessions, and then head towards the next important cluster of 29,000 to 29,500.
Okay, that's the view on Shree Cement. Let's move on, talk about an entire basket of stocks today that have been a buzz ever since the opening bell. It's the realty space that I'm talking about, because Nifty Realty today alone is up 3.1% just on an intraday basis. That entire index is up, which is phenomenal, which is a good move coming in rather. And a select pocket of stocks, selective Prestige, Sobha, Godrej Properties and Brigade, they are in focus today on the back of a note coming in from HDFC Securities in the morning, where if they've said that these Bangalore-based developers are facing some delays due to regulatory approvals, and approval cycles are getting elongated in Bengaluru. Now, these companies, Prestige, Sobha and Brigade, have emphasized this issue in their Q2 con call as well. Hurdles are resulting in postponement of planned launches, and this could in turn lead to supply chain constraints in the residential real market in the near term. The consequences could be increase in costs, lower project pipeline development, launches being pushed to subsequent quarters, delayed revenue generation, missed market opportunities and impact on the market share. However, the note also says that once these regulatory hurdles are moved past, once the approval comes in, it's looking very good for the residential market right now, because demand is very strong from the end user, as well as macroeconomic factors are looking supportive. So the top picks are Prestige Estates and Sobha. Godrej Properties may not see much impact from the Bengaluru issue, and Godrej Properties may also see some re-rating due to fundraise. So they've maintained their ad rating on Godrej Properties with a price of 3,000. Sobha maintained a buy with a target price of 2,639. Maintained a buy for Brigade as well with 1,400 as their target price, and also maintained a buy for Prestige Estates with 2,060 as the target price. Prestige Estates is the one that's soaring away 4.5% almost intraday gain coming in on just that stock alone. The Nifty Realty Index is also doing pretty well today.
All right, that's the entire realty pack buzzing away in trade. But with that, we've come to an end on all the stocks, and we are completely out of time on Market Fatafat. Snehi and I will take your leave. Ria, Sameet, thank you for taking the time out and joining us. With that, it's a wrap on this edition of Market Fatafat. Thank you so much for tuning in. Don't go anywhere. Closing trades is coming up next.
If you like this video, then like, share and subscribe to ET Now.